what we see is the opportunity in the market is, unless you have Bitcoin, unless you have a long-term store of value, what I'll call digital capital, and you're going to hold it for the next 30 or 40 years, no one's willing to give you a fair yield for the long term. Like, tell me who's going to give you 10% interest for the rest of your life?
Well,
no bank.
You are.
Yeah, we are, right? The Bitcoin community is, right? Your bank won't, a company won't, a government won't. If Bitcoin is an asset and it's appreciating, then you can create credit collateralized by that appreciating asset. So Bitcoin's digital capital appreciating faster than the cost of capital. The cost of capital is the S&P 500 return.
Michael Saylor, a Bitcoin bull, makes his most audacious prediction to date as the cryptocurrency community prepares for a possible breakthrough in the second half of September when the price of the cryptocurrency rises over $120,000. According to him, the market is about to enter a historic period that will lay the way for previously unheard of highs and resemble the dramatic price increases that Bitcoin experienced. The demand for the most popular digital asset in the world is soaring as a result of institutional investors in the US quickly growing their Bitcoin holdings. Saylor claims that a revolution that has the potential to completely alter the crypto environment is about to occur. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
I think the why Bitcoin has been consolidating, building its support in the teens right now, is because you've got $2.3 trillion of Bitcoin that is unbanked. And so you've got a lot of people that own a lot of Bitcoin, but they can't get a loan against it. And because they can't get a loan against it, at the point that you all of a sudden find yourself Bitcoin rich, but fiat poor, you don't have a lot of dollars, but you have a lot of Bitcoin, and you can't borrow against it, then you think, I have to go sell it. So I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling, and then people are saying, well, why are those employees selling this stock? Is that a vote of not confidence, in the company? And the answer is no. Right now, I think that the selling is crypto OGs that have had a lot of money for a long time. They're selling 5%. Diversifying, they're doing something like that. And the market is absorbing all of that energy, building its support. The volatility is coming out of the asset. That's a really good sign. But because what you want for the asset to mature is for lots of long-term capital holders, the big corporations, the big institutions to buy. You want the early OGs that bought Bitcoin for $1 or $5 or $10 to sell some, or as much as they need to, so they feel comfortable. You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. And the conundrum is, well, if the mega institutions are going to enter, if the volatility decreases, it's going to be boring for a while. And because it's boring for a while, people's adrenaline rush is going to drop. And it's like they had this big high and now the adrenaline is wearing off and they're a little bit bearish. But in a world of that's US dollar, the US economy is growing and the dollar is the king of the world. It's the world reserve currency. And there's no, there was no world war after World War II, right? So we haven't had a massive disruptive world war. Then you're living in a very particular situation, a particular time, and that's and you could fall into, in calculus, we call it a particular solution to a differential equation. If all of the boundary conditions are set, and if this, 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 then you can just plug in this number and you'll get out that answer. You actually have to derive it from first principles. So what you see is most people have never in their life had to derive anything from first principles. They've used the particular solutions given to them by someone that taught them the answer. And that breaks down when, for example, your entire currency collapses. For example, if you live in a economy where the currency is collapsing, like Lebanon, and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless. The people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and derive it. So I think, the great irony is, again, the CEO of Vanguard saying Bitcoin is not an investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard.
Ironic.
The most ironic outcome is most likely, according to Mr. Musk.
Michael Saylor has an unwavering optimism over the future of Bitcoin. They think that as BlackRock and other big firms enter the cryptocurrency market, exponential growth is imminent. They estimate that there may be 1 billion active cryptocurrency wallets globally by the end of 2025. This expansion is happening at an unprecedented rate, which could be the fastest wealth generation in history. They have come to the same conclusion after decades of research. Markets are driven by liquidity, and cryptocurrency is expected to outperform all other asset classes. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
So a lot of markets are yield starved, and on the other hand, most people, like in the conference the other day, there were 500 people in the room, and I asked them, how many of you have a bank account? Everybody's got a bank account. How many of your bank accounts yield more than 4.5%? None of them. How many of you would like your bank account to pay you 8 or 9 or 10%? All of them. Who's offering that? Nobody. What we see is the opportunity in the market is, unless you have Bitcoin, unless you have a long-term store of value, what I'll call digital capital, and you're going to hold it for the next 30 or 40 years, no one's willing to give you a fair yield for the long term. Tell me who's going to give you 10% interest for the rest of your life?
Well,
no bank.
You are.
Yeah, we are, right? The Bitcoin community is, right? Your bank won't, a company won't, a government won't. The strong governments that run the world, that are stable, don't wish to. They wish to pay you much less. And the weak governments, they are forced to pay more, but their currencies are collapsing and their government is collapsing. So you can't find a national creditor that would pay that rate. You can't, and most corporations, corporate finance strategy is not to issue credit and make it good. Their strategy is to avoid credit, to buy back their stock, right?
That's the conventional method.
They're very conventional. Bitcoin is going up faster than the S&P forever, right? Once you actually acknowledge that Bitcoin is appreciating more than the S&P forever, and my forecast is it appreciates about 29% a year for the next 21 years, and I've shared that with the community. But you could have any forecast, but if Bitcoin is an asset and it's appreciating, then you can create credit collateralized by that appreciating asset. So Bitcoin's digital capital appreciating faster than the cost of capital. The cost of capital is the S&P 500 return. And then credit written against it or issued against it is digital credit. And the digital credit can have longer duration or it can have short duration. It can have higher yields. It can be in any currency, because Bitcoin is a stronger currency, right? One of the keys in the credit market is if you're going to issue a credit instrument in a currency, you want it to be weaker than the collateral you hold. So if you issue the credit in a currency which is stronger than the currency you hold, you'll be upside down and you'll go bankrupt, right? And this happens, for example, when they borrow in dollars and they live in a country where the currency collapses, they're bankrupted, right? So what you want to do is you want to issue the credit in these other currencies. And so we can issue credit in yen or francs or Swiss francs or in euros or in dollars, because all of those currencies are weaker than the Bitcoin currency, right? And so we discovered that we could take on any kind of currency risk. We can we can offer higher yields. We can offer yields like a distressed debt, like a company going out of business, but we can then over collateralize them so that they look better than an investment grade. Investment grade companies in the United States aren't 2x or 3x over collateralized. We can create 5, 6, 7, 8, 10x over collateralized credit. So we can create credit which is less risky. We can create durations which are longer. We can create yields that are higher. And because we can create those in perpetual instruments, we can take them public. And if we take them public, then they'll have more liquidity. And so the idea is, give me something which is smarter, faster, stronger than everything else, right? Make it more liquid, make it longer duration, make it, more collateralized, make it less risky, make it higher yielding, better performing. And the opportunity of any kind of Bitcoin treasury company is you have the world's best collateral. You have Bitcoin digital capital. If you issue digital credit, you'll have the world's best credit. And that credit will then create amplification for the equity, because whatever volatility and whatever performance you strip off of the credit will accrue to the common stock shareholders. And so you create amplified Bitcoin in your equity. You create domesticated, low risk, low volatility Bitcoin with yield. That thing that doesn't have cash flows, we give it cash flows.
According to Michael Saylor, Bitcoin will continue to outperform the S&P 500 for decades to come. According to him, it will increase by nearly 30% annually over the next 21 years, making it more than simply a better investment. It's a brand new financial basis. Bitcoin can be used as the ultimate collateral for credit, since it is digital capital that continues to increase more quickly than the cost of capital or the return on the S&P. This makes it possible for businesses like MicroStrategy to create Bitcoin-backed digital credit loans and financial products that may be offered in dollars, euros, yen, or nearly any other currency. Bitcoin is stronger than all of the other currencies. This enables you to produce loans with yields that are significantly greater than those found in conventional markets, longer durations, and considerably stronger collateral. For instance, Bitcoin-backed credit may be backed between 5 and 10 times, which is much safer yet still pays more than standard investment-grade bonds, which may only be backed 2 or 3 times. These goods become liquid and tradable if they are made available to the general public, transforming Bitcoin from a non-yielding store of value into a machine that can provide consistent cash flows. The world's best collateral would result in the world's best credit, according to Saylor, and the debt markets would be safer, wiser, and more successful than they are now. Simultaneously, the equity of businesses that own Bitcoin would be amplified, since owners would receive the remaining returns after supporting the credit products. Put another way, you get high upside Bitcoin stock for investors and low risk Bitcoin with yield for institutions. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.